Hey guys, it's Mark Palsone. I'm going to show you guys a little secret today. I'm going to show you that if you would have implemented this strategy a couple years ago, you would have had monster returns. Okay? It's not a scam, it's not bull crap. I'm going to show you guys with proof how you guys could have made tons of money. This isn't guaranteed, but I'm going to show you guys what would have happened if you would have implemented this strategy. Um, I'm talking about copying the greatest investors in the world. I'm not talking about copying ordinary investors. I'm talking about copying the ones that, those billionaire investors that have 20, 30 years proven success record. I'm talking about, David Tepper, Stephen Mandel, Warren Buffett, Seth Klarman. I'm going to show you guys that if you would have bought, any stock that, if you just would have bought like a bucket of their stocks that they were buying and selling, you would have had crazy returns. So we're going to start off with David Tepper. He has a crazy success record, and he has compounded returns like crazy. So we're going to start off, and we're going to look at Guru Focus. So as you can see, if you were buying any of the stocks in 2009 that he was buying and selling, these are pretty high, 1,756% return on that one. Let's take a look at some more. Okay, so that stock he sold right there, Penn National Gaming, 3,200% it's up. So he has a couple that's down, but if you look, if you would have bought a bucket of them, you would be a happy camper. At 1,400%, 1,800%, 1,855. Let's look at these. Yeah, so if you would have bought a bucket of his stocks, even if he was selling, anything like that, buying them, adding to his positions, these are crazy returns. This is beating the S&P 500 by a lot. It's not an anomaly. He's been doing this for years, since the early 90s. He's been killing the market. So we're going to look at Stephen Mandel. I like to copy Stephen Mandel. I really like his stock picks. I think he has great taste in stocks. So yeah, he bought Visa in 2009, up 900% in that. Union Pacific is up 594%. He might have sold out of those, but showing you if you would have bought any of these and just held on to it. Las Vegas Sands Corp, 1,958%. Let's look at some more. And so he has a lot in the green and only a few in the red. If you would have bought a bucket of his stocks that he was buying, you'd be a happy camper. He bought MasterCard. Well, he's actually selling a little bit, 2009, but if you would have bought it and held on to it, another 1,174%, 236, 226.39%, 292%. Look at these. You'd be a really happy camper. It only takes a few winners in this business, Think of it like this. If you had a stock, if you bought a stock, you lost $1,000. Bought another stock, lost $1,000. Bought another stock, lost $1,000. Bought another stock, lost $1,000. And then bought another stock and made $40,000. All those first, whatever it was, 5 losers, totally worth it. Look at these. We're going to take a look at Warren Buffett. Everybody knows who Warren Buffett is. And here's the thing. Google's gonna tell you that I'm wrong and not to do this, but you're looking at the returns right now for yourself. Google's gonna tell you, you know, they have different shares and you can't follow the trend. But I mean, looks like if you just buy anything they buy and hold it, that you'd be a happy camper. I think if you only had a few stocks, it'd be really risky. But if you bought, you know, 20, 30 stocks, you'd make a lot of money. Warren Buffett, I don't see any in the red. Anything he was selling or buying. Really good returns. Really good returns. I think Stephen Mandel and David Tepper has had better returns than him in the last 10 years because it seems like they buy smaller stocks. Not all the time, but it seems like they do. And it just, with a smaller stock, you can make more money. Yeah, Warren Buffett just has a bunch in the green. Anything he was selling, anything he was buying. George Soros, a lot of people don't like him, but he's a billionaire and he knows how to buy stocks. You can learn a lot from him. George Soros, he's harder to follow because he buys and sells a lot, but his returns are crazy too. Let's see, I think he has some big winners in here. It's 738%. Let's see. Yeah, he has a lot of big winners too. These. Yep, if you just would have bought, you know, 20, 30 stocks, look at that, 3,000%. Domino's Pizza, could have 3,000%. The S&P 500 is only up like 200 and something percent from then. You would have killed the market. Killed it. Let's look. Yeah. Market's only up like what? About 148% from November 2009. When was that? Yeah. Look at that. Professionals, the financial advisors will tell you that you should just buy the S&P 500. Look at that. Look at the difference. It's not even up 200%. And this, look at that, 3,000%. Most of these stocks are up more than, you know, 200%, 770%, 304%. Look at a few more. 917%. He was buying Apple in 2009. You could have found Apple. Could have found Apple. Look at that. You would have, you know, MasterCard. He was buying MasterCard. Could have bought MasterCard, Apple. That's how I find good stocks. These guys know about the good stocks, you know. They've had, George Soros has been around since the 70s, you know, making money in stocks. He knows the stock market better than I do, better than you do. And I think this is a great strategy that not too many people know about this. You know, these billionaires, they have to issue a 13F. Every institution with over 100 million assets has to issue this 13F within 45 days after a quarter. And you can get a lot of information from this. I don't like all their buys and sells, but I find, you know, some great ideas. I think you can find the next Apple from these guys. Like I said, I'm not guaranteeing that it's going to work for you, but I mean, you can see for yourself. So I'll see you guys in the next video.